I am proud to announce the greatest series to ever be on YouTube. Episode 4. You guys love this series, so here we are, making episode 4. I know, I'm taking huge amounts of time to upload these episodes.
It's been 84 years.
But don't they say good things take time, or something like that? Yeah. Let's go with that. Now, if you guys watched episode 3, that was a big one. We went over actual market structure, and if you don't know that, well, you're kind of but I do have to say, this one just might take the cake. This episode is gonna completely transform your trading. In this episode, we're gonna go over momentum, which arguably could be more important than market structure. Momentum has a huge role in trading. If you don't have momentum, you don't have a good trade. All good trades have momentum. I'm gonna teach you how to find momentum, how to trade around it, and I'm gonna give you 3 different hacks that I use in my everyday trading plan to pinpoint this momentum. And if you pair this with the tricks I told you in previous episodes, you're gonna start seeing some serious results. I'm done talking, let's get on with the value. Well, I'm not done talking because I have to talk to you to teach the tricks, but I'm done with the intro. You get what I'm trying to say. Alright, so why do we need momentum in the first place? One of the biggest reasons why traders look for momentum is because momentum literally makes your life so much easier. For one, when a chart is moving up and down a lot, it's a lot easier to predict. When a chart is moving sideways or is consolidating, it's a lot harder to predict what is gonna happen next. So as a trader, you wanna see a lot of movement on your charts. Now, this may be a lot easier said than done, especially if you're trading in real time and not just looking at a chart from the past. That is, until you see these tricks. Let's start simple and start with the first trick though. The first trick is absolutely fire. It's absolutely wicked. It's candlesticks. Those were candlestick puns. But not wax candles. Oh no, the candles on your chart. A lot of people overlook this, but candlesticks can tell a story of a chart. I like to think of the chart as a book, and each candlestick is a little page of what that book is trying to tell. What I mean by that is this. Whenever you look at a candle, you can see what the buyers or sellers are currently thinking, literally in real time, which is basically a cheat code when trading. Now, as I'm sure most of you know, there are candlestick patterns. Sure, they can be useful, but what I'm about to teach you will make it so you won't have to memorize any of those patterns. You just need to look for these certain cues. When looking at these candles, we are looking for a few characteristics. The first one is the wick. The wick itself can tell us a lot. So if we have a candle that looks like this is saying that sellers got the price all the way down to here, but the buyers fought them off and got the price back up to here, which is a pretty bullish sign, as you can almost think of it as the buyers won the battle. If the candle looks like this means the buyers got the price all the way up to here, but the sellers came in and fought them off and got the price back down, which is a pretty bearish sign. Just this simple wick idea can give a pretty good indication where the chart is gonna head next and what the buyers and sellers are currently thinking. The bigger the wick, the stronger the sentiment. So, for example, if we see a candle like this with a long lower wick, we can assume that the chart will head upwards after this, as it's showing the buyers fought off the sellers and are now in control, which it does head upwards after this. If we see a large candle like this with a big upwards wick, we can assume the chart is about to fall, as it's showing the sellers are winning the battle, which is exactly what it ends up doing. This can be used on any time frame, but just know they will be stronger and more consistent on higher time frames. Now, I also think this is worth mentioning. You should not enter purely based on a candlestick. For example, seeing a large lower wick and entering a long right after it forms, no, do not do that. How I like to think of trading is almost like a checklist. The more checks you have, the more likely the trade will go in your favor. So this candlestick thing can be used as a good indication of what the chart is likely to do next, but you shouldn't enter purely based off of it. You should use it paired with everything that I'm about to teach you and use it as an extra check on that checklist. Now it's time to go to the second trick, and this is when we start getting into some really cool stuff. This one single trick will help your trades immensely. But first,
how would you like to double your money?
Yes, you heard him right. You can double your money.
How do I do that?
Well, there's a Forex broker out there that I personally use, and their name is Hanker Trade. If you use the link in my description and it's your first time depositing, they will match whatever you first deposit. So say if you first deposit $69, they will match that and give you $69.
That's pretty cool.
If you need a new Forex broker and want that deposit bonus, use the link in my description. Alright, this next trick I use for every single trade I take. Once I implemented this trick, it instantly made my strategy work better. It involves using this. This is the key metrics table for my private indicator, and it gives a ton of useful metrics of what's currently happening in real time. I created this table because I know just how important metrics like momentum and volatility are, and I wanted a fast way to present those values so I could use it to my advantage when trading live.
I can't do it. We'll do it live. Okay. We'll do it live! Fuck it!
So what we are looking for are a couple metrics. The first metric is volatility. Like I said in the beginning of the video, the more the price moves, the easier it is to predict. The less it moves, the harder it is to predict. Volatility is the rate at which the price increases or decreases. In a perfect world, when we are entering trades, we want the volatility metric set to high, as this tells us the price is moving a lot, which is exactly what we want. The next metric we want to look at is the momentum metric. Now this metric is one of the most important, as that's what this whole video is about. If you are entering long trades, you want this to be green and say bullish. If you're entering in short trades, you want this to be red and say bearish. You can also use this to tell when the trend is starting to change. For example, say if we were in a long trade here and the chart is going up and the momentum is set to bullish. We're in the clear and know we can stay in the trade. But once it gets to this point and the price hits a pretty strong resistance and the momentum on the trend table turns to bearish, this could be a good sign to exit the current trade, as the momentum is starting to change. And you can also see here that one of the candles right here had a long upper wick, which is what we were talking about before. So because we have a strong resistance and because we have a large upper wick on this candle and the trend table turned to bearish, we would exit this trade, which good thing we did, because the chart heads downwards right after this. Hopefully you're starting to see when all of these tips are put together how powerful they can actually be. You can also use this strength metric to see the strength of the current momentum. The higher the number, the stronger the move is. The lower the number, the weaker the move is. Overall, this trend table is extremely helpful. I cannot recommend it enough. It completely changes the way you look at the market. If you're interested in checking out the indicator, you can go to TradingLab.ai, or I'll leave a link in the description. Okay, so we know the first two tricks I use for momentum. The third trick is just like the cherry on top. The third trick involves using volume. Volume is a very important part in trading. Like I've said time and time again, we want a lot of movement on charts, and the only way you can have a lot of movement is by having a lot of volume. But when looking at volume, it can kind of be confusing on what's happening because it looks just like a lot of random rectangles on your chart. Well, here's a simple but very effective way to use volume in order to see the momentum of the chart. When you're in a long trade, you want the bullish volume to be increasing, as this will make the chart head upwards. So what you want to see is something like this, where the bars are getting larger and larger and all of them are green. This shows there's bullish momentum and it's getting stronger and stronger. You don't want to see something like this, as this means the chart is probably consolidating and not moving a lot and there's no momentum. As an extra little hint, the trend table for my private indicator also has a volume metric. It will basically identify all of this for you and tell you if the volume is currently bullish, bearish, or if there's no trend at all. This is a very simple little trick, but volume is very important when deciding to enter or not. If you don't have volume, you don't have a good trade. So if you pair the market structure technique from episode 3 with the candlestick characteristics, the trend table, and the volume trick, you will definitely start seeing your trades become more profitable. Again, if you're interested in the trend table, you can go to TradingLab.ai to get access to the private indicator. I promise I'll release episode 5 eventually, probably in like 9 months. Just kidding, I'll release it soon. Maybe.